I grew up in Bonn, Germany, where I spent the better part of my first 25 years in my life. Although my studies also brought me to California, to Paris, where I stayed each for about a year. My educational background is quantitative science and philosophy. I studied physics and later on researched and obtained my PhD in the field of theoretical and mathematical physics. I became actually very interested in risk management. I took a job as a risk manager for hedge funds, and that led me to my current field of hedge funds, where I built up risk management expertise and modeling of hedge fund returns over the years. Well, the concept of risk management and transparency has been around before. My colleagues and myself were the first who actually designed a product with huge liquidity, with high transparency and independent risk management, concepts that are probably as important as never before in these markets. The hedge fund industry at this very moment stands at a bifurcation point where its future will be very different from its past. It has to offer investors a different structure for their investments. The Cayman Island paradigm, in other words, asking investors to send off their money offshore without them ever knowing what is happening with their money, is not going to survive. There's going to be an independent risk management that is looking at the hedge fund managers. There's going to be increased transparency and liquidity wherever possible in order to make hedge funds attractive for those institutional investors that are leaving the industry right now. It was at the very beginning of the 18th century that in some parts of Northern Europe, the techniques and the environment for the emergence of capitalism emerged. And one thing is the introduction of a cash-free interbank and intrabank transaction market for financial assets. And that happened in Amsterdam. In Sweden, we saw the introduction of fractional reserve banking, the introduction of the concept of money credit, that a central bank can issue credit with not having the full collateral for their investors available, which enables banks to leverage and introduce credit into the overall economy. Around the same time, Bank of England was given the ability to issue paper money. Paper money stands also at the very beginning of modern capitalism. Now, interestingly, those three events, which are cornerstones in modern finance, happened pretty much simultaneously around the same time as the emergence of modern science. The core of a lot of crises stands the incentive problem. When people are badly or incorrectly or asymmetrically incentivized, they tend to behave in a way that's overall inefficient. Capitalism is still a very strong system. Do not overregulate it. Do not throw away the baby with the bathtub. Make sure that the incentive systems are set correctly.